Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The US dollar has now rallied to its highest level since late January against its US counterparty of 68.18, following mainly the rise in iron ore prices and the latest release of better than expected Chinese manufacturing data. Along with that, President Trump's mild approach on China on Friday in his key speech has also helped boost sentiment at the start of this month. All eyes turn to the RBA later today at 2:30, and it is widely expected the central bank will keep its interest rates on hold at a record low of 0.25%. However, all the attention will yet again fall on the bank's and company monetary policy statement. From the weekly outlook, mainly looking at the monthly and then down to the weekly, there is resistance quite firmly to about an 8-year trend line that comes in around 67.80.95 to 68.35. It is where I believe the bears are hibernating, or should I say more to the frankly, is that where they are positioned in a camp and could ambush the market anytime soon and send it back towards the level of 67.35 and then reassess from there. If we get a break of that level, then we are looking at 66.70 to 66 cents. The euro nudged slightly higher overnight and posted a fresh high of 111.53, with the US dollar index, which measures the greenback strength against a basket of 6 major currencies, is still focused on 97.30, and with the euro weighted at 57.6 to the US dollar, the fact is the market may see a further challenge to the upside. However, we need a close above 111.45 to reinforce the move to 111.90 to 112.50. A little bit of caution though, because we are getting very close to an overbought situation. However, the MACD and the ADX is still dominating the move, so that's why I feel there is still at least one more attempt towards that top side. However, if we get a break at 110.85, then that should reinstate a little bit more supply into the market and see a move back to 110.45 to 109.80. There is little to say towards dollar yen. Still remains in hibernation and still coasts along the sideways, one of the longest periods I've seen for a while, underneath that 108.15.25. From a technical assessment, little to go on. That is to give a strong call to either way as we continue, but I'm in favor that the market should break down eventually to that 107 region and then 106. Although my view in the sterling is neutral, it still looks like the bulls want to take the market back towards that 125 handle last night after posting an intraday high of 125.06. Nevertheless, from the pattern, let's see if the market has one more attempt to that region, and towards 125.5 is where I believe the market will get a strong rejection and therefore could see a sharp turnaround and eventually look back towards the 124 to 123 area. The call from 138.5 in dollar CAD has reached its objective of 136. So from a 250 point move, I am now neutral and rather sit out for the moment. But if you are trading and still remaining short, still continue to lower your stop losses and also to your take profit, just in case we get a sharp turnaround, because we are oversold. But as I mentioned, I'm neutral and I'd rather sit out for the moment. The outlook for gold is still relatively firm considering the recent whipsaw price action, and from the last 3.5 days is the market still focused on very much to that 1,750 to 1,760 to 66 or 8-year highs. Reassess from there if we get up that level, towards that level, as I feel from previously a rejection was clearly evident. But the technicals have not fully backed this move, so I don't have a very strong view on gold. However, since the close above 1,725 has given some more encouragement to the upside. Rounding off with oil, there's a couple of things to take note. One is the fact is there's divergence to the bear case from the RSI and also from the MACD, and therefore could see a rise failing towards that $36. and therefore could see a pullback towards a base of around $30 to around about 32. But we need to see a break of $34 to trigger that move. So do be on your guard if you're trading from the long side, in case we do see a snap back towards that downside, which will give us opportunity to buy. I'm not bearish, I'm just waiting for the pullback, and they've been shallow all the way since this recovery. So it's a matter of time, but I think with this bearish divergence, could be the right opportunity to start thinking about getting long off the lows of $30, or reassess from there at least. Well, that's a wrap for today. Thank you very much for joining me. But please be aware, in the next half an hour or so, we will get the RBA rate decision. That's at 2:30, so keep an eye on that. So that's a wrap for today. Thank you very much for joining me. As always, look out for the intraday report. Hope you enjoyed a great start to this day.